Hello, everybody. Welcome to today's webinar, jointly brought to you by Ecopia and Faura, entitled Rewriting the Rules, Data, Innovation, and the Next Era of P&C Insurance. And that's really what we're talking about is what are some of the struggles, the complications, even some of the brick walls that we as an industry are really up against lately, and are there paths to move past that, to find ways to do a better job and frankly survive in what I think is a materially shifted context for P&C insurance, certainly in the US, but this is not only a US story. These same patterns are actually replicating themselves, honestly, in every geography really out there. Maybe the drivers and the context are slightly different, but the underlying notion is pretty consistent globally across P&C. So with that as the maybe a bit gloom and doom kind of setting, don't worry, there is hope. So we're going to talk about how we move past all that and figure out a path forward. I'm the moderator today. I'm Bryan Falchuk. I'm the founder of Insurance Evolution Partners and the CEO of an industry trade organization called PLRB that's focused on the claims world. You may know me from my book series, The Future of Insurance, or the podcast series of the same name. And I'm basically a P&C insurance nerd, veteran, something nicer than either of those words maybe, but I've been around for a while in the space and just really focused on how we, as a very important industry, can continue to find ways to do better and thrive, because I think insurance is necessary. We sort of enable the entire world to function by allowing it to set risk aside and go about its business. So without us, as boring as people might say we are, we kind of matter to literally everything in the world. So that's a bit of background on me. I'd love to hear from our two speakers. And Valkyrie, I'm going to hand it over to you first, but a bit of background on yourself, and then Matt will kick it over to you.
Yeah, absolutely. No, good to see everyone. And so excited to be talking about this. I just this morning was looking at a couple new like regulation changes in the Gulf states around mitigation, and I know we have a lot to talk about. So I won't touch too much on that just yet. But my name is Valkyrie Holmes. I'm one of the co-founders and CEO of a company called Faura. We focus on validating and verifying information about properties in higher risk areas in partnership with our policyholders. So we've really seen that there is a big emphasis on first-party data in combination with third-party data to really get this understanding of the confidence of what we're looking at on our properties. And we do that a lot of different ways, including working with Ecopia. My background is in data science, so I spent my early career with NASA's Seas Institute and then SpaceX on their commercial rideshare team, and then moved over to climate after receiving a grant to focus on this research full time, and kind of spun Faura out of that initial research. So really excited to hop into it, and I'll pass it over to Matt.
Valkyrie, I just want to say commercial rideshare in the context of SpaceX. We're not talking about Uber and Lyft. That's ride sharing of
Yeah,
like rocket ships.
the most expensive Uber basically that exists right now.
Where you say ride share and it's like, oh, no big deal, like $8 and go down the street. No, this is a little bit different.
Yeah, a little bit.
Yeah.
It's getting cheaper though. It's getting cheaper.
The
Not
cargo.
to mention the cargo that's
Yes.
going up there. That's how propelling what
yeah.
Ecopia does too.
Well, so yeah, Matt,
exactly.
give us a
Great
take on
segue.
Ecopia.
So I'm Matt. I work with Ecopia. I help lead our insurance team in operations. Been doing that for about 4 years, or 3 years. And then prior to that, I was with Esri, working on the insurance team, talking about geospatial journeys, talking about the architecture of what you need to layer all of this data in a geospatial context, and then applying it to very specific insurance workflows. So you could apply, 80% of data has a geospatial component to it. And it really depends. We've worked with life insurance and talking about, mortality rates in certain areas or crime, all the way to, the leader of catastrophe management department at a very large insurer saying, I have no way to see very quickly on a dashboard what's my potential loss after seeing, an event come through. So, all of that work has come to a bubble with me at Ecopia now. And what we do is take that satellite imagery, like the satellites that are going up in one of your past life, Valkyrie, but taking imagery and Earth observation data and really applying it to the um, civil engineering space, the municipal government space, defense, and my job, and I see Jay's on here as well. Our job is to apply that to insurance. So taking everything from the foundational data set, so every single building footprint across the US and applying measurements to that and taking that data and providing it in meaningful ways to Valkyrie's team so that they can see the independent risks of all of these individual risks.
So I want to dig into a bit of the doom and gloom. I want to talk about kind of what the two of you and your companies are seeing as you work with different insurers as you get out there, and some of the paths forward. But two things I want to do before that. One is a bit of housekeeping, and then two is setting the stage a little bit more. And then I'm
Yes.
gonna be quiet and kick it back to the two of you. From a housekeeping standpoint, for all of our attendees, we're recording this so that we can make it available to people who registered and didn't make it. So heads up on that, just so you know that it's all being recorded. The other thing is, as much as we could all talk for, I don't know, probably 6 or 7 days without a break on this stuff, because we're all pretty passionate about it, it's also really important that we talk about what all of you, the attendees, want us to be touching on. So there's a Q&A button at the bottom of your Zoom window. Make sure that throughout the conversation, anytime lightning strikes and you've got an idea, it was a really bad choice of phrases to say lightning strikes, and we're talking about like weather and other kinds of risks to property here. But if an idea strikes, add your question to the Q&A. I'll keep my eye on that. Maybe it's something we capture and handle in the flow of the conversation if it's really relevant to something we're already talking about. But otherwise, we'll save some time and hit some of those questions at the end. So please do anything that comes to you about the conversation we've got going on. Please do put that in the Q&A and we'll get to that as well. So that's the housekeeping, the context setting. To get a little bit more specific about sort of the framing that I was getting at before, the challenge that the industry faces is, historically we faced tough weather, we faced wildfires, we faced hurricanes, and name your issue, and we've had mapping solutions and we've had predictive analytics and modeling, et cetera. Obviously, the level of sophistication is materially different technologically today than it ever could have been. Obviously, like that's not a big leap, but what I'm seeing as materially different, and this is quite a global thing, is it used to be that we would have maybe a cluster of events in time or in geography, or maybe both, where it's like it's a really bad year for folks who have been around. I know there's some people that I see in the attendee list. 2011 was one of those years for the industry. We had Christchurch, and we had other earthquakes and fires and hurricanes, like terrible year. Fukushima came, like it was a very bad year from a human standpoint, from a loss standpoint, from an insurance standpoint. But then 2012 was really good. And so, like, yes, we spent a ton of money making people whole, putting businesses back together, making good on the policies in 2011, but we recovered after that. So you had these kind of ebb and flow or spikes. Now it's like everything is a spike, and you're walking across flat ground, not realizing, you're like 300 feet in the air on spikes. It's a materially different frequency and severity picture than it ever was. And that's before you factor in the amount of litigation, the size of verdicts, and mediated settlements, and that sort of, like, everything is bumped up. You can't just raise your rates or pull out of a tough area for a little bit until things settle down again, because there is no settle down again. And one of the issues I'm seeing is carriers aren't necessarily keeping up with that technological progression in the tools to get smarter about the risk, to understand it better, to price it more accurately and effectively. And so we're using dated tools that were not built for the context that they're living in right now. And that context is not sustainable with the reactions we've been able to bring to market before, like, just jack up rates and pull out for a little while and whatever. That's the doom and gloom that I see. But there are ways to navigate that, and that's what I want to get into is, what's your takes on that, Matt? I'll start off with you. That sort of context. Am I off base here? Is that what you're seeing? And let's start that conversation about, so what do we do if, like, what's the state of today really? What's the impact of it?
Yeah, I mean, from a geospatial context, and I'm always going to apply it to a geospatial just because that's how I'm wired, and how I appreciate looking at the at the data and the stats, and I do see some fixes. And so let's talk about the process of how I think about this, and then maybe where some of the solution providers are maybe missing the mark, and then we can talk about where things can get better. But it all starts with asset placement on my side. So like layering, taking all of these layers, right? So you have all of your assets. So what are you actually physically insuring, and where is that location of all of those insured assets? And we establish that. Then we go into peril prediction, right? So stochastic models from our friends at AAR, RMS. I'm dating myself because they've changed names, but like, let's be honest here, we still call them AIR and RMS. And then you take a look at impact control. So live event streams that are coming through and seeing, okay, we see this cone of uncertainty. We're going to lose 70 cajillion billion dollars. I'm throwing that number out there because I don't want it to be specifically tied to any event, but we're taking a big wide swath for impact, or identifying impact over our insureds. And then, understanding how that relates over time. So those four components, the placing of the assets, predicting what's going to happen to them, then observing what's happening to them, and then adopting changes as it goes, year over year with your renewal cycle. All that has a geospatial context. Where I'm seeing some challenges are, along with scoring, or along with those old-fashioned peril models where they could be related to a zip code or a census block group, or these different, sometimes data has to be organized in census block groups. I'm not saying, there's definitely nuances there. But when we talk about climate, or we talk about fire, and we talk about moratoriums, a moratorium happens in San Bernardino County, and we're saying, or a fire happens in San Bernardino County, and we're taking a whole moratorium across that county. It's a massive county. You have a lot bigger difference between the coastal side and Valkyrie, you're gonna have to help me with my California geography. But like a fire in Redlands, so making a moratorium on that sort of area is probably not the best idea. What we have to do is draw some buffers around that to select specific risks, because that's when actually people shop for insurance, is when they have a bad claim experience, or if there's something nearby and they're saying, what is our fire coverage, and should we be considering a different one?
Valkyrie, given that you are in California,
Yeah.
this is a wonderful segue to you, but what's your take on that? And is that Matt's got a geospatial view, your perspective is a little bit different. What's your take on kind of the current state of things and whether it's working or workable?
Yeah. No, I mean, so I think the place that I'm coming at this from is more from an individual kind of like structure perspective and a structural survivability perspective. And what I mean by that is, when we think about traditional climate models, and I've talked about this in great length, but a lot of these traditional climate models have select primary modifiers that they're looking at on individual properties. It's things like square footage, number of stories, like what kind of roof you have maybe is in that kind of primary modifier layer. And then you have all of these other secondary modifiers that may or may not be tweaking that model depending on location and data availability. And I think something that we've really drilled in on, especially in the last year or so, is the idea that better risk selection ultimately comes from better data. And a lot of companies right now need to evolve their books to really fit not only what the risk is going to look like right now, but what the risk is going to look like in 5 years, in 10 years, and that really shifts with the amount of natural disaster increase that we're seeing year over year. So from us and our perspective, I think we initially saw in a lot of companies that we started to work with that a lot of people have access to this third-party data. The question now is, what do you do with that data? and how do we combine that data together with things like customer feedback or risk mitigation to provide more things like action items or grant funding or whatever incentives to improve that risk. And that kind of gets along to what I'm talking about in terms of like evolving the risk of our books. That
Yeah.
starts with more granular information. It starts with not just this wide range of, is a disaster going to happen in this area that we're used to seeing from traditional climate models? It has to go a level deeper in, maybe it's at an inspection, maybe it's just like more engagement on an individual policyholder level. But there's a lot of improvements that we could be making in these different steps along the process that I think are
Yeah.
really valuable. I think the last thing I'll say on that is basically just the idea that consumers want more digitized and personalized feedback from their insurance company. Like if you're a homeowner and you're living in a wildfire prone area, you're having to learn about your insurance company much more. You're having to do the cost benefit analysis in your head of switching carriers or doing this mitigation work and trying to fit that into our already extremely busy schedules and lives. And it's all about making that process really seamless for everyone involved and aligning kind of like the return on investment from both sides. So if I approach it from an insurance company's perspective, I want to get more granular information to give it back to my underwriters to say, this is a property, this is the best representation we have of this property, and this increases underwriting efficiency by X amount. And on my policyholder side, if I'm aligning my policyholder with the fact that, hey, if your policy looks like this, your risk is approximately this, and this is what you can do to fix it, all of a sudden it just starts to increase that positive feedback loop of people making themselves more profitable consumers and protecting their most valuable assets. So there's a
Yeah.
lot of different pieces in that, I think.
Yeah. I want to pick up on maybe not a conflict, but you both made points that I think are somewhat at odds in a way. So Valkyrie, you just said something about the data's there, everyone has access to it. So like there is better information at our fingertips. Um, but Matt, something that you mentioned before is the sort of the accuracy gap, if you will, that like we don't we don't necessarily have a clear enough picture of some of the risks when you talk about like San Bernardino County or this entire MSA or zip code or whatever, or you're in this town, but the best I can do is drop a pin in the middle of the town and like that's good enough, even though your house is nowhere near there. And by the way, there's a stream next to your house that floods 3 times a year and the center of town has nothing. Um, and you both have heard me tell this story, but I sat in a presentation with a predictive model provider, AI-based model provider, presenting to a chief actuary, and the prediction of the loss ratio for a given prospect that they were quoting on was 5 points closer to what the actual experience is. So a 5 point better prediction, not percent, but percentage points better with this tool than without it. And the chief actuary just goes like, "Oh, that's not that much." And I know there isn't a single person that's attending this that's like, okay, so if you thought it was a 65 and it was actually a 70, that's not a big difference. How many carriers are sitting on 20 or 30 points of combined ratio profitability? Zero. The average has been over 100 in a lot of lines of business recently. So like 5 points is game changing. Progressive's the only one of the top 10 who's been profitable in auto for the past decade. And that's a 6 point underwriting advantage. So it's almost all of the difference that Progressive's been able to get on auto. And no one's been able to catch them. So if like I can hand you 5 points, you're like, it's not a big deal. I don't need it. I feel like we do that regularly, and yet we also then look at things like parametric insurance and say, well, basis risk. I don't know that that property got hit when the hurricane came through. And so if I'm just paying them out whether they had a loss or not, that doesn't seem right. So it's like we use having really inaccurate data as an excuse not to do something when it's new, parametric. But at the same time, we're living with really inaccurate data. Valkyrie, despite your point that actually it's out there, we could do better. We live with it regularly because it's what we've been doing and we're sort of used to it, even though profitability is so challenged right now. How do the two of you see that sort of that almost hypocrisy in the industry of like, how do we can't, I always say like, you can't complain about money and buy a Ferrari at the same time, although that might be why you're complaining about money. Like you can't have it both ways. And so we're complaining about profitability and not having the accurate data, but when we have these opportunities, we don't take them. Am I missing something here, or is that what you're seeing as well? We could be doing better and we're sure we're not.
I think we could be doing better. Now, I see the gaps in three different ways. One is just in coverage area, right? So there's really refined data attributes that are available, but they might be bound to areas where you have aerial imagery and really, really high quality aerial imagery. But then if you talk about, the rural areas where there's no coverage there, then you're kind of SOL there.
Yeah.
And then as far as other gaps there, so I mean that's more for like coverage area, but then fill rate. So we have a lot of data aggregators out there that are just, yeah, we're going to give you all these attributes. You can look at their attribute list and it's amazing. It's incredible. It's like, wow, you have basement quality data? Or like, you could tell me if this has a basement or what the square footage of the basement is. And they're like,
Wow.
oh, yeah, we can definitely do that for you. We can even give you their credit score. Guess what? It's a fill rate of maybe 14%. And it's like, oh, shoot, what do we do there? And then the other part is like just full on accuracy, right? So taking a point of, whether it be location or actually, I don't know where my thought process is with accuracy because I have the area coverage and the fill rate, but we have some assumptions that we could draw there and append it to say, oh, maybe it's more that where we're appending it to say a zip code data set. And then we just, or a rating territory. I love rating territories where we just broadly paint that stroke across a whole rating territory instead
Yeah.
of just selecting and balancing out our different risks. So yeah, that person might say, yeah, that one risk is bad for us, but guess what? We have 10 others that are balancing that one out.
But what if you could make all 11 of them correct?
What if you
That's
could?
that's where I'm
Yeah.
looking. I mean, Valkyrie, you're focused like at the individual property
Mhm.
in your modeling work.
Yeah.
So like, what's your take on this?
Yeah. So, I mean, I think I agree a lot with the coverage and fill rate kind of conversation that you were discussing, Matt. And a lot of that comes from our own experience in testing a lot of third-party, models and vendors. And I start to kind of move a step further outside of that and say, okay, if we are using these third-party data sources to make decisions, and then risk modeling companies are also basing their scores off of this data, the same data providers that we're testing, and we know that the fill rate isn't there. Like we had an instance where, and I think I've told you all about this, like we were testing a provider and we were seeing that we were getting fill rates of 80-85%, really good on our variables. And then we would look in some of the like the categorization, and half of the variables were just null values. So like they were technically filled, but how that impacts our scores, when we're initially testing things like this, it really makes a big impact. So if I'm an underwriter and I'm looking at an individual property and I see that I have a hurricane score, a wildfire score, or something like that, and it's telling me that a property is low risk or moderate risk, when in reality that's based off of like using the 14% stat, it's based on 14% of what could be looked at on that property. I think that's a really big challenge that we currently have. Another thing there is really kind of like going back to what you initially said in the beginning, Bryan, which is just a lot of this information is outdated. So I can be looking on a property at variables on what the roof looks like, what the condition of the roof is, what the exterior siding looks like, water damage, all of these things. But ultimately, if that information was from 2021, or they haven't done, like we haven't sent an inspector out there in 3 years, and that property has changed quite significantly, we can get a little bit of that from aerial imaging and depending on how concentrated that is as well. But that's something that we see a really big amount of the time. And then you start to get into this conversation of, well, the cost to send someone out there at this
Yeah.
point in time, especially for these high risk properties, it's just not scalable for us to be
Yeah.
doing inspections on as many properties as are high risk right now on our books. So
Mhm.
it's like this, you're weighing a lot of different priorities all the time, which, we're going to have to do anyways. But it makes it much harder for us to say, okay, we used to inspect 10% of our book, and now according to these models we need to inspect 25% of our book, and that just like does not, it just doesn't equalize, right? So I think there's a lot to be said about just how outdated these sources are, and we still talk to companies today, like the majority of people we talk to still use Google Street View and Zillow listings to get a more accurate representation, because we need to standardize a lot of that, which I think both looking at it from an individual perspective and being able to pinpoint exactly where a property is, I think that makes it a lot easier to get the most accurate information.
Yeah. We did get a question. I would normally hold this until the end, but it's super timely because it's really tied to what we're talking about. And this is from Astrid. It's a great question. So it's about both the accuracy and the fill rate issue, and she's speaking specifically around property, but it says some data providers will actually model that missing data. Now, I don't think filling in null counts as modeling, but they genuinely try to put something in there. They're transparent about it, but is that the right answer? What's the accuracy then? Because you have to look at the quality of their model and is it proven, and how does that play out? And that she's calling it, this is really tricky in property, and in particular, unlike in auto where we have VIN numbers, we have specific builds of vehicles that are generally verifiable, not all of the options, but many of them. And as many cars as there are out there, it's still a fixed universe. There is no
Mhm.
fixed universe of homes. Yes, there are developments where they're all cookie cutter and stuff, but generally speaking, properties are all different. Even the ground underneath them is different. So the same home next door could have a wildly different experience given the soil and, underground water and all sorts of other things, even just the pipe fittings in that particular home and what the humidity was like the day that they were put together. I mean, so many variables.
Yeah.
Um, yeah, this sort of trying to make up for the fill issue, but then creating more of an accuracy issue potentially, or at least an unknown. It may be accurate.
Mhm.
You don't know that yet. This is a complication in property. Do the two of you agree with that, or do you think things are different today from a modeling standpoint?
I don't think they are. I don't think they are modeling, or I don't think they are much different now. I think with new data sources and self inspections coming out, I think that there's providing better sources, and I think that having us apply a data foundation and encouraging a standardized data foundation across the insurance industry is important. So entering in that location, getting that location right, and then appending all the values to how many other structures you have there, and then you could start going. And I know that there's a lot of really good carriers out there that do this, where they'll take one model and then they'll take another model and they'll take another model and they'll score them accordingly and use all of them with that same location spot. And I mean, they're able to stay profitable in these situations. So it's really about establishing that foundational data set, the foundational models internally, and then they can take good new stuff like Faura's data and apply that to their data set. There's definitely a
Yeah.
Faura plug.
No, I mean, I 100% agree. And I think the accuracy problem that we create in a lot of this, I think we've seen it as stakeholders working very separately to solve an issue that needs to be very interconnected. So like our company started in government agencies and communities helping people apply for grant reimbursements. Like ultimately, it was very consumer driven. How do we get people to understand the risk of their properties and then connect that to some kind of incentive to get people to maintain their risk year over year? And we approached insurance the same way, which is, if we can get people to not only understand this risk, but reduce their risk and have this consistent stream of data, we're confirming not only what third parties are giving us, so we're reducing the amount of accuracy that we would actually lose by just like filling in these values or replacing it with dummy data. But then we're also making it a lot easier for us to drive policyholder retention. And there's like a lot of different benefits with understanding on a regular basis a greater percentage of our properties on the ground versus having to rely on just fully third-party data sources. And so we do the side by side where this is the standard report that you would get and the standard information you would get on a lot of your properties. This is how much more, like typically we can get anywhere from 4 to 6 times the amount of information you would traditionally get from just like an in-person inspection, or even in some cases just like standard manual desk underwriting. And we put them side by side and we say, okay, what helps you make the most accurate decision? And so like the filling in a lot of those gaps on that basis, I think is really interesting. And I think like that's ultimately what we need to do in order to solve the problem, because insurance is inherently a very unique financial mechanism that gets people to think more about their risk. And as homeowners, we're ultimately trying to understand, how do I just like maintain my most valuable asset in times like this. So especially for high risk areas, I think it makes a lot of difference what kind of vents you have, and whether there's debris in your gutters, and the all of the different things that maybe to like a regular traditional inspection wouldn't really matter as much, but in these cases it definitely changes from house to house, neighborhood to neighborhood, etc.
So I think we're talking about a lot of the issues that are at play and the complications with some hints at some of the better choices that you can make. Can we get into that a little bit more explicitly? So from an innovation or innovative solution standpoint, how do we move forward? So we leave people on a more hopeful note than I set up at the beginning.
Of course. I mean, first and foremost, I think, establishing a solid data foundation and having a geospatial context at all the climate situations. I mean, you can't have climate adaptation without considering the geospatial proximity of that home with its potential hazards.
That's the playing field for it.
Yeah.
Yeah.
Yeah, like that establishing the playing field, and then just clearly understanding the location and what are we up against in these certain spots, right? And then it goes into the mitigation aspect, right? So once we have the foundation, we have a solid understanding of the potential risks and the attributes based on an address. Just typing in an address and saying, tell me everything I need to know about this. Now, not too much, not too little, but like that right amount without any of these null amounts. And I think that's a user interface issue more than a data aggregation issue. But then I'm trying to think of like that. So we identify that, okay, Matt's home, my home, has earthquake prone. How do we incentivize Matt as a carrier to take care of his house?
Yeah.
What do you think?
No, I mean, I honestly love talking about, like, as we continue to grow, there's just like more success stories of like individual policyholders that we can talk about. And one like fairly recently was actually someone that we personally know, who was non-renewed by their carrier because they had this Faura assessment on their property. The carrier was basically citing that there was pooling on their roof, and there were a couple other things as the reason as to why they were non-renewed. And they're in California, in a fairly populated area, but still, LA, I know we're all thinking about the wildfires there. So they got this non-renewal notice. They have this Faura assessment that makes them aware of, okay, I know there are things that I can do to mitigate my risk of pooling on my roof. They're able to send pictures and videos of what their roof looks like today, the mitigation activity that they can do or have done now to reduce their risk and get that policy reinstated. And there's like a lot of different things that go through our minds as we think about this from a homeowner's perspective, which is, okay, in the case of this policyholder, they had told us before that, like, hey, if I didn't know about Faura and I hadn't like done this assessment, then I wouldn't have even known that there was any other opportunity to change things about my property to reinstate my policy besides just what my agent had told me, which is just, we think you're gonna have to replace your roof. And like that's no fault on the agent, right? That's just like very much more common knowledge of, okay, if there's problems here, it's likely that they can't necessarily be remedied as quickly as you need to in that binding period. When in reality, there's a lot of things that you can do to step up your resilience in the eyes of a carrier. So not only did they get to keep their policy with their traditional provider, and not have to pay an extra $3 to $4 grand a year by switching to another carrier, but that carrier that they are now still with kept that premium and generated a more profitable consumer, because now not only did they demonstrate that, hey, I'm willing to do this mitigation work for a couple $100 instead of paying the thousands of dollars, but they also realized, oh, we did like a full remodel of our house last year and we added seismic retrofits. They didn't even think to report that to their insurance company. And we talked to so many people that had the same outcome, because again, like it's not as ingrained in the process. So like reducing your risk or doing wildfire mitigation work for people that have been doing this for 10, 20 years, they've never had to think about the fact that they need to report this to their insurer, right? So I think in terms of incentives, just connecting that piece with the fact that, hey, like there are discounts in your area, or if you need to qualify for insurance in a specific area, you do these 3 things, and then all of a sudden your availability of options, your coverage options are much more frequent. And I think that ultimately is incentive enough for a lot of people, but then it's like connecting them to grants in their area. It's contractors that can do this work. It's like it's personalizing it to the property. I think there's a lot of different ways that we can drive this kind of like digitized approach to insureds. And we just see this all the time. We see this with new regulation as well. I know I opened up with that in the beginning here, but like we're in California now, there's mandated discounts that we have to be able to account for. And if you're a carrier that maybe does inspections on property, like on 20% of your properties every 3 years, like how do you really know that, like which properties are qualifying for those discounts, right? And that's just one example. So there's a lot of ways that we've like consistently been experimenting with, and I think there's always going to be different things that we can incorporate, but at the end of the day, people are learning more about their policies, and if we can drive more value to people that are already having to pay more, that's going to keep a policyholder with you as a carrier versus switching for $50 to another carrier next year. You know what I mean?
Yeah, I mean, I think you raise an interesting point. Is we're inherently, because of what your 2 companies do, this was sort of set up as like, what are the innovative or technology or data and tools kinds of things we can do on our side to be better underwriters and better buyers of risk. The other piece of it is you send someone a non-renewal notice because their property is now out of appetite because of XYZ situation. Have you thought about that process and whether the right answer is before you get, and I know there's legal timing when you have to send the conditional non-renewal or the non-renewal. Well, could you not get ahead of that? And the reason that's driving it, what if there's like, if you're pulling out of an area, I get it. Like, other than lifting up their house and moving it, like that's not something you mitigate. But your example was a fantastic one, Valkyrie. Is I was gonna say, yeah, what's the cost though? And the cost in that particular instance was significantly less than alternative coverage would have been. Not even factoring in like the pain of going through that. The agent would be mad. Is the agent going to start to pull other business? Like there's more than just that one policy on the line. What, if anything, are we, and I don't expect either of you to have the answer to this, but I think that's a challenge for us in the industry, is we need to get more real about the amount of talk we do around predict and prevent. Here's an example of it. It doesn't mean putting in IoT sensors and water shutoff valves in every property. Like that's lovely, but there are other situations where could we not forewarn people like, hey, we noticed this about your property. It's concerning. It may become an issue at renewal. Here's a path to mitigating it ahead of time. And wouldn't it be even better is because we have these relationships with these builders or whatever, like we've secured, favorable pricing for you if you're interested in doing something about it. Like we have purchasing power. Could we not deploy that? Everyone's like, we'll give them a discount on your policy. So sometimes you can, sometimes you can't, and it may not be enough to make a difference, but could we at least make it easier for them to be more responsible homeowners by empowering them with knowledge and with access. And then they're better insureds. They're going to be stickier. They're going to be more on top of their property that you wish
Hmm.
they were anyway. It's like, I think there's something for us to do in that.
Yeah. Well, I
Absolutely.
mean,
I Go for it. Go
yeah.
for it.
No, I mean, I have two things just like quickly to mention there. Obviously I follow a lot of like new mitigation like laws and new things around legislation, and like we were talking about Colorado the last time we were on a call, just like the Wildfire Risk Modeling Act that just got passed there. That's not something that is unique to Colorado necessarily. Like that trend is going to follow along. And for people that aren't familiar, it's this new act that got passed that basically requires carriers that are using a wildfire risk score to disclose to all of their policyholders, okay, this is what goes into this score, this is what you can do about it, this is, all the mitigation activity that's available to you, right? And we talk to companies that are operating in Colorado that have no idea what to do now because
Yeah.
because we're not used to that level of communication. And I think like the other thing for policyholders is just if we're improving the amount of communication that happens on that basis at non-renewal, then ultimately it makes it a lot easier for us to track this first party information. Like that's one of the biggest things that we lead with is, okay, like we have this idea, a better idea of where this property actually is. So like we have this
Hmm.
foundational asset. And then from there, if we can track that over time and we know, okay, for example, like we have weather alerts in the Faura system. So if you're a policyholder and we know that a wildfire is going to happen in your area in the next week, we can say, hey, like we noticed that from your last assessment, you have debris on your roof and you like to lean logs against your house and you haven't cleared out under your deck in a little while, right? Here are a couple things that you can do in the event of this disaster coming your way that actively reduce your risk, and it pairs a sense of urgency.
Yeah.
But if we don't have a good understanding of where that property is, how updated that data is, like what was it 6 months ago, a year ago?
Yeah.
How are we
Mhm.
going to make more accurate non-renewals? Like it's the piecing together and like kind of cherry picking properties is one thing in terms of profitability, but it's also in retaining the business that we already have. If we can improve the selection process there, I think that makes a world of difference as well.
Yeah. And these are highly motivated homeowners in
Yep.
dire situations where like they're gonna do it because they don't want to lose their home. Like
Mhm.
insurance or not,
Yeah.
they don't want to lose their home.
Mhm.
Yeah. Exactly.
By one or two ways, right? Losing your
Yeah.
mortgage or losing your home
Yep.
because of the hazard too.
Yeah.
So I would fight like heck to do that. And I
Yeah.
mean, in my example where I have a house that it has an older roof, and in my customer journey with my carrier or my agent, they said, your roof's getting old, fix it. And it's like, oh, okay. That that's not fun. Mind you, I grew up in a roofing family and I live thousands of miles away from home. I don't trust anybody here
Yeah.
to do my roof like I would trust my old crew. So that I mean I couldn't imagine what it would be like for somebody who doesn't know that industry at all. So
Yeah.
it's a polite nudge to a trusted other company. Like if you have company advocacy, say here's some trusted people within our network, just like a
Yeah.
healthcare plan. Here's some trusted people in our neighborhood. We can get some quotes for you automatically.
When every property insurer has that network, either
Hmm.
themselves or they subscribe to it or they're tied into a vendor who has a network. Like they all have contractor networks. They
Hmm.
have roofers that have done, tens or hundreds of roofs for them in a given area. They warranty that work. Like we're already standing behind it. Why wouldn't we recommend it?
Hmm.
Um, yeah, I think you guys know I used to work for an insurtech that does texting in claims. And a lot of carriers were like, oh, we should use this proactively on the underwriting side to prevent claims, sending out a text to all of our auto customers when we know there's hail coming to their area, as an example. And like this example's been beaten to death. So many webinars I've been on, people are like, oh, we could send a text ahead of a hailstorm. And I was like, yeah, but what if you also write their homeowners and they don't have a garage? When you're sending a text, it's like, hey, put your car in the garage.
Yeah.
You know more
Yeah.
about them if you have both lines. It's like offensive and ignorant to say, it's like, Verizon sent me something to, like, we should sign up for TV service. Like, I already have TV service from you. Like, isn't that great that you know so much about me? If I add this service I already have, which now I can't get the better pricing that you're advertising to me because I'm already a customer. It's like doubly offensive. But we know, like, okay, they don't have a garage to stick the car in. We probably shouldn't send that message to them. But could we partner with a local garage in their area and like get them a discount on putting their car in that underground lot or, the high rise lot, whatever, overnight? Because it might cost us $10 per policyholder, but it's going to save us, 3,600 in like paintless dent repair and, auto claims. And it's things like that
Yeah.
that's like recognizing there's more to the story that we actually already have the information on, let alone getting better data and not just having null and some of like, we know that they have a home or not if we're their homeowners insurer. We know that they have a garage or not, or we better know that. These are
Yeah.
seem like easy things for us to figure out, and the data's all sitting there already.
Some of it
Well,
is, some of
yeah.
it isn't. There's always some nuances to that, so not to throw it in there, but there are large classic car insurers that are very,
Sure,
very,
but then they don't
very
have to do
cool
it.
and
Yeah.
yeah. And
Yeah.
then like identifying a garage in a flood scenario where you're having tidal surge and you're like, okay, we want to get them up above a certain
Yeah.
level, like then it's applying
Well,
it's
that's why I
finding
was only
creative ways
talking
to
about
solve that
hail.
problem. But
Because
yes, sorry.
Yeah.
No, but Matt, I mean, kind of
Yeah.
back to that chief actuary point is these are some of the responses is like, well, but in this situation, that wouldn't do any good. It's okay. But in this situation where you're complaining about your losses, it would. So when we talk about Valkyrie, the situations you're saying to pre-warn the homeowner and be like, hey, here are the things that you could do that we think might be an issue for your home given this risk. You can be like, well, but that doesn't help with this kind of loss, or it doesn't help with houses where we haven't seen. It's like, fine, but for a population, it would help. So why are you saying no to that? And if you can get a
Yeah.
piece of your book performing better, and you have those homeowners who don't need to find other coverage or other places to live, and losing all of the, family heirlooms and history that they built, like there's all of these stories that it's like just because it doesn't apply to 100%, or there might be some tricks in some of it. I mean, can we not 80/20 this and do better where we can
Yeah.
do better?
Well, I mean, and I think like we see that a lot in just being able to demonstrate like the ROI of investing in a service like this. And I know that a lot of companies kind of model after like more traditional auto telematics as well, where it's you have this driving score and you get these recommendations. And, like my family even uses, the same thing through our insurance company. And something that we think is interesting is like even if it's not 100%, the simple idea of giving a consumer something that they can hold on to, and it puts their property into context, as well as puts it into context of maybe a community or a neighborhood or even their county. Like if I have a home score of 65 on our scale, and I can see in my neighborhood that I'm actually below a lot of the other neighbors in my area, I'm gonna think, oh crap, I'm below the average. Like, what can I do to
Yeah.
to bump this score up? And there's companies like Power that do the same thing with energy efficiency, where you're constantly seeing how you rank in energy efficiency with your neighbors, and you can like bump your score up, and there's like different perks that you can unlock and things. So it's like the word gamify gets used a lot in this context,
Yeah.
but it really is gamifying the approach to mitigation, and that makes it easier to prioritize if you know that you're getting more out of it, both from the carrier side of collecting this information, and then consumers just like motivating each other to do the work that needs to be done. And there's like a couple other companies that quantify it really well, where I think on average for wildfire mitigation work, someone is 26% more likely to do mitigation work if they see their neighbor doing it first.
Yeah.
So, we apply that on a very broad scale, and all of a sudden we don't have to send inspectors out every place. We don't have to be, like relying solely on these third-party data sets, or not understanding where this location actually is. We can put it all together and we solve it from all these pieces. Like, every insurance company is so complex. Like, we're not unfamiliar with solving things in a lot of different ways that piece together. So we just need to involve this consumer engagement piece in a way that I don't think a lot of companies have done before, but I also don't think we've needed to necessarily until the last decade or so of the losses that we've continued to incur. So
yeah. Well, look, I know we're getting close on time. I want to give you both a chance to give some closing thoughts. What are takeaways or thoughts looking forward? Matt, you wanna go first?
Well, I think we have 4 different classifications of solving this problem. We can solve it culturally, legally, financially, and technically. I think that those, if we look at culturally within an organization, to look at the data, establish that foundation, get people to buy in, get our policy or get our insureds bought in
Yeah.
to new technology, new communications with to and from the insurer. There's that collaborative effort, right? Me not wanting to disclose too much information to my insurer because maybe I don't want them to know my stuff. Like, it goes both ways.
Yeah.
Legally, and taking a look at the regulations, the financially part. So how are we going to mitigate this financially and incentivize our users and buy that extra data that might move that needle just a little bit more in our favor? And then, technically speaking, right, establishing those certain triggers, I guess, or building out and investing in more geospatial data, but then also building out the frameworks and the technical frameworks that would support that as well. All 4 of those elements, those classifications, I think are going to be needed. It's not it can be easy in individual aspects, but it takes those 4.
Yeah. And I think you're right to lead with culture, because it's probably the toughest one. Is
Oh
your
yeah,
company up for it? Are they ready for it? And that's the one. You can't just pick up a solution off the shelf and put it into place, or hire that one person who's done this before. Is like, you need to move the organization. It's a tough
yeah.
one.
Are we good with being good enough, or do we
Yeah.
want better?
Yeah. Valkyrie, how about your perspective?
yeah, I always like to kind of like close with the idea that ultimately this is not a this is an old problem that has continued to increase and get more challenging as we move along. And my job isn't to try to convince someone that they have this problem. It's to convince people that there's a solution that exists that they haven't thought of yet.
Hmm.
And there, I think a lot of solutions currently exist, but need to be integrated into a system that is ready to adopt them. So kind of coming off of what you just said, Matt, like, we hear a lot of the same questions in these calls that we have, where it's, where does your data come from? How much data do you collect? How do you verify what's correct? And I guess my question to a lot of companies that, are on this call or maybe listening is do you actually know where a lot of this information is coming from, at what rate it's coming from, what that fill rate looks like, and I think that question has to be answered first before we
Yeah.
take the leap to understanding how much more we can get out of consumers and out of our policyholders. And so ultimately, I think the true kind of like base of a lot of the information that we're talking about today needs to come from an understanding of where we need to improve. Um, and that could just be, hey, we're using these climate models and we're using inspections, and that's it. And like,
Yeah.
it could be something as simple as that, but at least then we have the most simple idea of where we can go from there. And so yeah, I guess the ending to this is, at least from my side, just taking a deeper look into our current systems and the data processes that we have in play, and asking those questions, I think will get us all to the bottom of what the true challenge is in every organization.
I think that's a really good note to leave it on, is that being willing to take that look, ultimately be curious. And hopefully that's what this conversation has done, is sparked a little bit of thinking for everyone about, well, what are we doing in our organization? Do we have to do it that way? Is it fine and good enough? And is that good enough anymore? Because that the water level has risen, and maybe we need to stop using just fire analogies. Like, there's a different issue afoot in the context we're in, and maybe we need to rethink the way we've been going about it, and maybe ask more of ourselves, move our culture, as Matt pointed out. Can't thank you both enough for doing this conversation, and hopefully it was informative and insightful for everyone who tuned in. Obviously, people can learn more about Faura and Ecopia on your websites, and hopefully hear from everybody on LinkedIn and thoughts about this, and keep the conversation going. So thank you both very much.
Thank you,
Thanks
Bryan.
for
Thank you for
moderating.
hosting us.
Thanks,
Appreciate
everyone.
it.